Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing language of business so you don't have to. Today we have a really interesting report coming from TOMI Environmental Solutions. Incorporated, it's an 8K filing, which usually means something important and a bit urgent has happened. Let's dive in and see what is shaking. Alright, so this report is coming out on the 21st of November 2025, and it looks like the company is facing some pretty significant challenges with staying listed on the Nasdaq stock exchange. This is a big deal for any company, as being on Nasdaq means investors can easily buy and sell their stock. The main story here is that TOMI Environmental Solutions Incorporated, or TOMI as well, call them from now on, received not one but two deficiency letters from Nasdaq. Think of these as official warnings that the company is not meeting the basic requirements to stay listed. The first warning, which they got on the 17th of November 2025, is about their stock price. Nasdaq has a rule that the stock needs to trade at a minimum of $1 per S-share for a certain period. For 30 days straight, TOMI's stock was trading below that $1 mark. This is often a sign that investors are not feeling very confident about the company's future. Now, Nasdaq does give companies some breathing room. TOMI has until May 18, 2026, which is about 6 months, to get their stock price back up to at least $1 for 10 consecutive business days. If they can do that, Nasdaq will send them a letter saying they are back in compliance. But that is not all. Just a few days later, on the 21st of November 2025, they got another letter. This one is about their company finances, specifically their stockholders' equity. Nasdaq wants companies to have at least $2.5 million in equity to stay listed on the Nasdaq capital market. Stockholders' equity is basically the company's net worth assets minus liabilities. For this financial requirement, TOMI has 45 days from the 21st of November 2025, so until around the 5th of January 2026, to submit a plan to Nasdaq that shows how they will fix this equity issue. If Nasdaq likes the plan, they can give TOMI up to 180 more days, so until around May 2026. To actually meet the requirement, if they fail to meet it, or if Nasdaq rejects their plan, they can request a hearing. The company is saying they are going to do everything they can to get back in line with Nasdaq's rules and stay listed. This is what they have to say, but the reality is, facing these two issues at once is a tough spot to be in. Their stock, which is common stock with a par value of 1 cent per S-share, is traded under the ticker symbol TOMZ. This is the stock that needs to hit that $1 mark to avoid further problems. Scroll emerging growth company Sri Scroll. It is interesting, and maybe a little concerning, that they are checking this box indicating they are an emerging growth company. This often means they are still in a phase of rapid growth and potentially more volatile financially. While there are no detailed financial tables directly presented for discussion in this specific 8, the core issue is clearly financial health and market perception of the company, reflected in the stock price and equity levels. The fact that they are being warned about their equity suggests that their liabilities might be growing faster than their assets, or that they have experienced significant losses. Now, putting on my Warren Buffett hat, when a company is struggling to meet basic listing requirements like stock price and equity, it is a red flag. Investors generally want to see stability and a clear path to profitability. Receiving two deficiency letters at once, covering both market valuation and financial bedrock, is a significant concern. It tells us that sentiment around TOMI Environmental Solutions Incorporated is likely very negative right now. The company states they will take all reasonable measures, which is standard corporate speak. But the real question is, what measures can they realistically take? To boost the stock price, they might need to announce positive news, perhaps a new contract, a product breakthrough, or even a stock buyback, if they have the cash. To fix the equity issue, they would likely need to raise significant capital, perhaps by issuing more shares, which could dilute existing shareholders or find a strategic investor. The risks here are substantial. If they cannot regain compliance, their stock could be delisted from Nasdaq. This would make it much harder for investors to trade their shares, potentially causing the stock price to plummet further. It would also damage the company's reputation significantly, making it harder to secure future funding or attract talent. Looking at the situation, TOMI Environmental Solutions Incorporated is in a classic turnaround challenge. They have identified their problems and they have acknowledged them. The path forward involves executing a strong plan to satisfy Nasdaq's requirements. The immediate opportunity for the company is to present a credible plan and, more importantly, to execute it effectively. The risk is that the market has already lost faith, and even a solid plan might not be enough to win back investor confidence quickly. Ultimately, TOMI Environmental Solutions Incorporated is facing a critical juncture. Their ability to navigate these Nasdaq delisting warnings will be a major deciding factor in their future. We will be watching closely to see if they can pull off a comeback. Alright, that is our breakdown of TOMI Environmental Solutions' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.